After a cooler than expected inflation report, the markets are calm today. We saw some data yesterday that we'll be discussing. OpEx tomorrow. What's the latest in Asia with our correspondent Kevin, and much more today on Money Never Sleeps. Thanks for joining us today, folks. As we get going, do us a favor, hit that like, subscribe to our channel if you haven't yet, and remember that nothing we say is financial advice, so please do your own research. Kev, welcome back. I know you were out there at the coal mine yesterday making some money. How are we feeling today after seeing that inflation report, the latest in Asia? Where's your head at when it comes to the markets?
It's all over the place, right? There's obviously a lot of things that are going on. It's a very, very hard market to navigate, and right now I think it's the most confusing because you can't necessarily tell if what's holding up the market is just people's positioning or if it's a little bit of, well, let's just keep buying the market because the trend seems to be to the upside, or if we're just trying to avoid, the bad news that really is here. I mean, we got a ton of bad news. We're getting bad news every day, but the market just is like shrugging it off every year. As Taylor Swift would say, shake it off. That's what they would pretty much do. It's the only Taylor Swift song I knew. But yeah, I'm pretty sure that right now I am just waiting to see what happens after tomorrow. OpEx, $5 trillion worth of S&P related contracts are going to be expiring. Right now, you kind of have to wonder if they're just trying to make as much money as they possibly can going into tomorrow. And then after that, anything can happen. We'll talk a little bit about that and how that's related to the VIX later, but that's just kind of where my head is right now.
Yeah, I'm still, dumbfounded by the amount of debt that we're seeing and how the delinquencies continue to pile up on that. We can discuss that here in a second. We did have inflation data yesterday. I'm sure everyone at this point has seen it, but just to recap, came in pretty much actually right at expectations. But it's still well above the Fed's target of 2%. We see headline CPI at 3.4, the core CPI numbers removing food and energy, the volatile food and energy, as they all like to say, is at 3.6 still. I saw, a look at the breakdown of the numbers showed that some of the biggest things there are transportation services, shelter still at 5.5%, which is pretty nuts year over year. That's a crazy high number. And with that, they're making progress kind of, but not enough that it's going to warrant, any big action when it comes to cutting rates. We see that the expectation is still for a skip at this next meeting in June. Probability for a skip in July is still at around 70%. The market is pricing in that we see the first rate cut, at least one rate cut by the September 18th meeting. And, maybe that's the case. Maybe something breaks before then and we get more. I'm not really sure. But the markets are once again getting excited, and that has led to some all-time highs across TradFi. We saw the Dow touch 40K for the first time. I believe that's an all-time high, right? It never gone above 40 before today. Yeah, so 40K there. We have the S&P at 5,300. We have the NASDAQ at 18.6 thousand. So a lot of, green across the board. Nothing too crazy there. Meanwhile, we see, Coinbase is getting absolutely roasted today, down about 8.5%. Crypto is having a bit of a pullback after a nice run yesterday. The meme stock mania that lasted 2 days. GameStop has given back a lot of its gains. And what do we say when the Barstool guys and Dave Portnoy say that they're buying into it? That's usually a good sign that we're at the top. Dave even went on and was like complaining about the fact that like the markets are so unfair, which I don't disagree with his sentiment, but
he's right.
When you're he's right, but for the wrong reasons. Like he's right, but he's also an idiot because he bought
gambling
go top, right? And
Literally, yeah.
he put it out there on his day trader show, and he got a lot of people that watch that show. Good for him. Like, the guy's built up quite the following, but he's just a consistent top signal, and I don't see that changing anytime soon.
Just to add to that, I like how our boy Jim Cramer said that the bottom is in too last week. So let's just hope that all the signals are flashing and they all come to fruition if that's the case, right? That'd be very nice to see the inverse Kramer start kicking ass in that case. But yeah, I mean, I really wish Roaring Kitty, if he was going to come back and do something, would have done it a little bit closer to like today. Today would have been a great day to do it because tomorrow is OpEx and you would have fucked a lot of people out of, tons of money that were shorting the shit out of GameStop. That's kind of when you do it. If you're going to be shooting memes at your ass for, I don't know, 3 days straight, every 20 seconds. He's putting out Mel Gibson in Signs, which is a great fucking movie. But at this point, it's like I don't know. I think people are kind of they're licking their wounds. The fact that it's down like 70% since they bought in at $80 or so. So it's really funny right now looking at GameStop. It's more like curb stomp at this point. But yeah, I think the meme stock mania, they crushed that. Shows you that retail wasn't necessarily in it. I think a lot of people long the shit out of it and also had puts on it once they got to a certain level. It doesn't help that Robinhood and a lot of these other exchanges were also halting trading every few seconds too, right? Just a lot of people that had a lot of exposure to get out of the market and it just sold off every single time. Is what it is.
Is what it is. Let's talk about some of this debt right now and the impact that could have. So I'll share the screen here for a second.
Yep.
This post that you sent from can you pronounce their name for me real quick?
Kobayashi.
Yeah, there we go.
Kobayashi letter.
We see student loan debt. We see credit card debt continuing to pick up. And if we look at it, Q1, it's at the highest levels it's been since on the way down 2011, but then on the way up, back in 2008 when the financial crisis happened. So we're seeing more and more credit card debt being moved to delinquent status. We're seeing it with mortgages as well. Student loans are having issues too. There's just not enough cash out there for people to pay everything. And we also saw in today's data, retail sales came in under expectation. So we have all of these indicators that the health of the consumer is not very good right now. And this can only go on for so long with elevated valuations. Now, I will say part of why the valuations on a lot of these stocks has remained high is that they have been expecting the worst. They have been putting out, a lot of them have been cutting back on labor, and that's going to help the bottom line. A lot of them have been hoarding away cash because they're planning for a recession or worse. And so when they, it's smart on their parts to lower expectations and come in above them. I guess, they can keep playing that game for as long as they want. Let's see what that leads to.
I will one up you too on this because we're showing pretty much how strapped the consumer is. And another thing that we talked about, I was reading an article too from Zero Hedge. The average credit card debt right now is about $6,500, which is pretty fucking amazing. So yeah, I mean, if you think about that across most Americans, that kind of adds up with that $100 billion worth of debt that currently is out there right now. That is delinquent, right? Obviously, there's a lot more debt than just $100 billion from the consumer. But let's see. Ooh, I had the wrong speaker on. All right, there we go. Now I sound way better. Oh my goodness, driving me insane there. Yeah, the other thing I really wanted to add is why aren't the banks failing yet? Right? That's something that's boggled my mind since the bank term funding program has been getting paid back. It's been getting paid back a little bit, but it's not on par even with what it should be. And now here we are. They're not going to cut rates. That shows you that rates are going to stay stagnant. We're seeing people, especially millennials, dig into their 401ks. People are just looking for cash everywhere. They're getting China, which kind of lines up what we're going to talk next. Selling off U.S. Treasuries for gold, and they're probably going to sell off the gold for some type of liquidity at some point in the future. And then we're starting to see, just there's no money going in anywhere. Yesterday you sent me that thing about the Mirage in Vegas. I was in the Mirage literally like a week and a half ago. Now they're going to cease operations, what, July 7th or something like that?
July 17th. And so I looked into that a little bit more. It's actually becoming a hard rock,
I can hear you.
Seminole hard rock can you hear me okay? Okay. It's becoming a
You're
Seminole
good.
hard
You're
rock
good.
in 2027. Now, it's a surprise because they're expecting to keep operations going. The plan was
Yeah.
for it to be a 3-year renovation where it became a Seminole hard rock, but that is no longer the case, and they're going to be closing it. I think I sent you that article about the resort in Hawaii that's been at 48% occupancy and is being sold for pennies on the dollar. It's the same, like, it every day it feels like we're in Groundhog's Day, where another, more and more delinquencies, more and more pieces of commercial real estate are being written down and sold at gigantic losses. I don't think it ends well. Maybe I'm crazy. Maybe I'm the one who's wrong here, and it doesn't end well.
No,
And it does
you're
end well.
not. This is the part that makes no sense to me either. Why aren't the banks hurting more? Right? Obviously, the equity prices are inflated out of the fuck. That's unicorn farts at this point, right? You can't expect it to make any type of logical sense. But when you just try and think about this logically in terms of how the monetary system works, if they are not issuing new debt, they are not making more money. That means you're not increasing money into the in circulating supply, right? Because pretty much debt is just saying, oh, well, you owe us $5,000, and then you just keep loaning out new money, and that money is just created out of, not say thin air, but yes. Uh, at that point, we should see a lot more money flowing in the economy, but it's not. And if that's the case, these banks are losing money like crazy, and people, like I said, dipping in their 401ks, dipping into their savings account. You're starting to see some of that flight continue to increase here because people don't have the cash on hand, so now they're dipping into their savings. It's like this doesn't end well for any of these banks, especially if they're making huge losses on these commercial real estate properties and these huge properties, like you said, the resorts in Hawaii. Several of them have already been going under. Now we're starting to see the casinos. There's another casino not too far from where I am that's also going under, and that's a local one. So it shows you that people even in the Midwest are having problems too. It doesn't end well one bit. But the question is, when do we care about it? Well, we've cared about it for a while. I just don't necessarily know if people care about it until the panic starts to happen, right? We've also seen the fear and greed index go from 40, or pretty much like 40, which is fearful, to being up around 60 now, which is in a matter of 2 days. So the markets are definitely getting very excited here, but there's things that are happening that are just getting worse and worse, for the point where there's something should break soon. I really don't know if they're holding it till after OpEx, but it just seems like these banks and some of these commercial real estate properties and everything that's kind of unwinding here, because it is unwinding before our eyes. I don't know if that's going to come and hit all at one time, or if it's just going to be a domino effect. Like one goes, then the next, then the next, then the next. It's going to be so interesting to see how that plays out, because I think it doesn't last much longer, in my opinion, but I could be wrong, right? Logic doesn't apply here sometimes.
Nope, it does not. It's all a fugazi. That's all it is. All right. What else, from a big picture macros perspective, give us the Asia update, and then we can move into looking at some of the charts.
Definitely. Well, let's just pull up my friend Dario here. Uh, Obviously, this is from, I think, bar chart, or this is from Bloomberg. My bad. This is from Bloomberg. But let's just pull up this chart here, and it shows you that China's selling U.S. Treasuries, and this is in Q1. I believe they had the largest sale of U.S. Treasuries at one time to date, $53 billion worth of U.S. Treasuries. So you're starting to see that. Remember, we're talking about the yen carry trade. This also applies to what's going on here. This is why Janet Yellen's freaking out, because they are selling off their exposure to U.S. debt. They're trying to get liquidity, cash in some way, but I don't know if they're holding it specifically in USD. Maybe part of it. I think what we're seeing is they're pushing a lot of it into gold, and that's why gold has been rallying like crazy. I didn't believe that gold was a retail move one bit. It didn't make any sense for it to be. Kind of knew that China was buying gold at record levels. Kind of makes sense. And we pull up that chart all the time of gold, and we see that purple line and going across. It's like once it gets around there, that's when people tend to be sellers of gold. Something usually happens right around that time. We're hovering right above it. We could, obviously you're breaking history, but eventually, if we look at this probably on like a monthly or yearly chart, there's a good chance that we're going to see it kind of be, oh, that was resistance once again, right? Wicked up, but at the same time, it's still closed below it. That's my assumption of what's going to happen. But the reason this is important, because it puts a lot of stress on the United States. Obviously, they don't want to be seeing people not buying, debt. Them offloading it makes things a lot harder to run the country when you don't have the largest exposure to it. China obviously is number one. Japan's number two. We're seeing a weakening yen. Eventually it's going to come to a head where they're going to have to start offloading a lot of these assets. So this is the thing that's been really big in China right now. It's also something really interesting is that Michael Burry obviously released what he is buying for Q1, and it was a lot of gold ETFs. And we also saw that he's buying some Chinese assets, Alibaba. I don't know. I don't know if the Chinese stocks and equities makes much sense here. And I want to show you that because there's only one that's really taking off, and that's the Hang Seng. So everyone is already saying that China's back and they're breaking out like crazy. This is the Hang Seng, right? Obviously, since that low at around 14, just shy of, just a little bit under 15K, it's rallied 31%, right? And how long of a time this is? This is currently today, May. This happened back in January. So in a short period of time, their largest index has rallied significantly. Now, take that against something like the comp. Yeah, it's had a really good rally too, but for the most part, it's not breaking out of any trend like the other one is, right? This is about 18% up. And then if we look at the CSI, really good bounce at the beginning, but now it's kind of flatlining. It's going sideways here, right? The reason I will be bullish on China at some point. The reason I'm not doing it so much now, and obviously this is kind of sideways trading. First, you had a really good dip right here. A lot of Americans bought that. Same thing with here, and then obviously the Hang Seng is just going up nonstop since. The reason will be bullish on China is because I think that the exports will pick up once again, and that trade will increase. But right now, if the exports aren't picking up, that shows me that global demand is really weak. And what we're seeing right now is speculation on the part of pumping money into the markets and moving these prices up. We do know that, we saw tons of repo operations that did happen within this period, and it allowed a lot of liquidity to be freed up, and people were buying the shit out of this. They also were not allowed to short sell, right? They weren't allowed to borrow stocks and short sell or do any of that between certain hours. So obviously the price went up from there. I didn't think it was going to last much longer just because that usually is a sign that things are going to get worse. But here we are. Now, the other thing is too, once we usually get a golden cross, which we're starting to see on the daily for the Hang Seng, start to roll over after that. Usually these are inverted signals. So if things get really bad, then obviously if you get a death cross, you're going to start trading way below it. But when you start seeing something like this, and we look at it every time we do get a golden cross, we tend to have a period of decline that follows. So I'm very interested to see how this plays out, continuing going into the rest of this year. Maybe Michael Burry knows something I don't. Maybe he sees that there's a lot of value in China and their economy is going to be picking up. But I do know that we are in a globally synchronized economy. Everything, relies on one another, especially when it comes to trade. I know that the tariffs aren't necessarily great for U.S. consumers or prices, especially if they're coming in, because that's just going to be carried over to whoever's buying some of those assets. But for the most part right now, I think that Asia is in a pretty big pickle. Both with export demand showing how much demand there is in the world, but at the same time, the currency issue with Japan and then also just offloading debt shows me that a lot of these countries really do need liquidity. And eventually that time will come. I just don't know if it's going to be this year or if it's going to be next year. It really depends on when they decide that, hey, we really got to do something drastic here in order to save our economy.
All right, let's move into crypto for a bit. Where do you see the crypto market heading? Anything major on your end there?
Yeah, so we just got word of the CME group, right? That they were going to allow Bitcoin trading. Hold on, someone keeps texting me. Where is it? I just had it. But CME group, we talk about, let me pull up the Coinbase chart because Coinbase one is probably the better BTC chart. We talk about how we've had these specific times in history where we get these events, right? Coinbase, Bitcoin futures ETF. This was actually CME. This is CME, the futures, CME1, Bitcoin futures. I believe we're getting the CME group futures also trading. And then we know that a lot of what happened with Congress today is going to allow them to pretty much operate. But it seems like we're getting these events all at bad times, all at the top. I mean, this you can say is the ETFs and the CME group, trading that's being allowed to happen. Maybe we get rolling over, but we talk about these points when we're hitting history right here, top of this parallel channel, top of this parallel channel. We did hit the top of this parallel channel. The question is, do we have enough juice, enough strength to push up further and, just get another double tap of it, or break it and then maybe we're wrong, right? Or it could be a fake out if it breaks above, 74, 75K. And this is big picture. This is big picture, 100%. Get out of this. Some people will Some people will look at this and say, we're in a parallel channel. Do I think we're in a parallel channel? I could kind of see it, but at the same time, you need to break this sooner than later, right? But if we look on the daily, we're pretty high up. Volume has been dropping. So I'm open to the fact that we could get a little bit of a push up here. And the reason I do think that there could be a push up maybe to 75K. And again, I don't necessarily want it to go up there, but just looking at it, I have to be. I'm not sharing my screen, am I?
No.
That would have been nice to have known, Jweb. I'm blind and I'm looking at the other side of the screen. I'm so sorry, guys. I kept on getting alerts from my computer. But yeah, this is what I meant. We're in a parallel channel right here. We hit the top of this massive parallel channel that we've been in, since the Coinbase IPO. Here's the futures ETF. Every time we hit this, what comes after that. It's a pretty significant push to the downside. Maybe we're in that already, maybe not. It really depends on what this pattern right here is doing. If this is a parallel channel pushing this one up higher, maybe it's a fake out up to like above here, 75K, maybe to 80K. You need a lot of liquidity to come in and kind of save your ass in that case. But I do think that would probably roll over. And then every time we hit up here, eventually we do come down here. And we've only tried it once. I would anticipate that we would probably come back a second time, especially with how much time has passed in between, right? We made our way all the way up there. Doesn't seem like there's going to be a lot of money flowing into crypto in the future. I mean, all these major events are kind of out of the way. You're just kind of hoping that the economy gets better and then people plow into it, or something bad absolutely happens and Bitcoin turns out to be the safe haven that everyone says it's meant to be, that Satoshi, had envisioned it to be, and then Bitcoin just, skyrockets. I'm open to that possibility too. I just don't think it's necessarily going to be true, because people will be selling off anything to be able to pay for their rent, their bills, any of their livelihood, keep that going. But the other thing that's really interesting too is Bitcoin dominance. So that's why I'm kind of like, yes, we could see a bit of a pump for Bitcoin. I'm not necessarily saying it's going to be long lived, but I do think that if it does pump, we could get back to about 57% and maybe break above that in Bitcoin dominance. I mean, we were at 56.20, I think, today. So we had a really good move to the upside. Now, with this too, the interesting thing is if Bitcoin does decide to start pulling back here and people are, not necessarily plowing into stable coins or plowing into USD, we could see, Bitcoin dominance continue to pick up, and that could absolutely wreck alts. I'm seeing a lot of people that I respect say that they're extremely bullish on alts here. With Bitcoin dominance being 56 and the price being so heavily up here, and we look at, say, Matic, and I keep bringing up Matic just because this is a really great chart, in my opinion, where we got the death cross that already happened. You're in a parallel channel that should break to the downside. You're right now, you're at resistance. You're finding this bottom trend line as resistance. You would really need to invalidate a lot of shit in order to get to a point where it's like, okay, this is alt season, right? I mean, at the most, maybe the 200 EMA, unless there's like a shit ton of liquidity just pumped into one of these coins. You're finding resistance here. You're finding resistance on Link also here. And again, it's just these sideways trading channels. I could even pull this out a little bit more. We could do something like this. But it just seems like nothing is really working out for a lot of these alts. So I think that wishing that we're going to get into an alt season just because Bitcoin pumped a little bit, I think we have to look at Bitcoin dominance to see if it'll let us. And, if we go to BTC against ETH, I think or is it ETH BTC? I think it's ETH BTC. I'm tweaking today.
We saw the news. There was news about an hour ago from Watcher.Guru that Chainlink, the Chainlink pump today is because they completed tests with JP Morgan, Franklin Templeton, BNY Mellon, and other banks to accelerate the tokenization of funds. So I think there is some excitement there. Now, will that flow back to the token value? TBD. We've been getting that promise from Chainlink for a long time. I was buying Chainlink back when it was in the $6 to $7 range. I stopped buying when it went above $8. I haven't bought any since. I haven't sold any since. I'm sitting here hoping that we go back to 50 someday in a bull run, and then I can sell. But that is where the optimism and why we saw a little pop on that in the last hour.
For sure, right?
Yeah.
And again, I haven't been keeping up with any of that stuff because I also think that that's not really helpful in terms of the macro. I mean, it's helpful in the short term, but it's not helpful in terms of seeing, okay, is that the reason why an asset's going to rally from here? So looking at this from ETH BTC perspective, this is also just showing you that alts are bleeding out to Bitcoin, and this is going to continue to be a problem as long as dominance stays high. So could alts rally? Sure, but it's not going to be nearly as strong as Bitcoin would be. Bitcoin's going to put a bit of a damper on that, and we have to wonder about circulation of assets. The only way it would be is if money from Bitcoin flows into the alts and you see dominance pull back, and then those trading pairs kind of have a little bit of freedom in terms of how much of a control Bitcoin has over the entire market cap. You saw USDT dominance kind of pull back here. Right now it's on the 50 moving average. Let's see how that plays out. My fear is that after OpEx, things are going to kind of get crazy towards the end of March, end of May. And I could be wrong. All right. Obviously, got a bit of a pump, but I'm very curious to see if this holds because I think that this is going to pump, but I'm also been wrong in the past. And I think that there's a very good argument to say that this is just a rollover. And if that's the case, you would probably lose this 60,000. You'd be trading below it and maybe test the bottom of this parallel channel. So if it does get to, about 67 or so and it gets rejected again, we're probably going to roll down to maybe it could even roll down to about 55. I mean, even if we pull this out long enough, what if we get to the 200 and that's where we find support at 52 and we push up again, could even break out, right? There's a lot of scenarios that could happen, but I want to give it until after OpEx to give pretty much a fair assessment of what could potentially happen. All I'm saying right now is Bitcoin dominance is strong. That's going to be problematic for all of alts. Let's wrap it up with this. This is the one that's going to be really interesting because tomorrow is OpEx, and that's the VIX. It's losing like crazy, right? It's getting its ass kicked inwards, and what was it? Getting its shit put. How do you say it? Getting its shit pushed in?
Yeah, getting its shit pushed in.
It's one of my favorite sayings now. But yeah, look at this red candle, right? And the interesting thing is, we were talking about how it's filling all these gaps to the downside. Well, it filled a major gap to the upside, right? It was going up here, and then it just came right back down and filled that. And now we're kind of just sitting at this level of support once again, where we found support here, 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 here. I was looking at an article today, and it was talking about, people just short volatility, how it's pretty much printing money. And then I saw someone on Twitter who just posted how $12 VIX, shorts are in the money going into OpEx tomorrow. And that's hilarious because it just means that they're pushing the price down to make as much money as possible. But now you got a ton of people who are off sides in this trade. What happens when people are off sides? Very similar to what happened on GME, right? You get a bit of a quick pump to the upside. So with everything that we've seen from the S&P, and I know I've said this, that the volume is decreasing and we probably should be seeing something different than what we currently are seeing. And everyone's extremely bullish. We just hit all-time highs, right? Almost. Obviously, the Russell is not hitting an all-time high at all. It's just, I mean, it still hasn't even put in a yearly high. It's lower than it was. And we still see how weak it's performing against the major indexes. I have a funny feeling that we are going to see a pretty good pullback. We are going to see the VIX, pop here. We're getting to the end of this channel. Maybe it doesn't happen until after the June OpEx. I mean, we could just, keep rallying and just keep staying, low here. But I have a funny feeling that there's a bit of a fake out. People aren't taking the insurance, and that's going to be a very dangerous bet, similar to how people kept their shorts open from GameStop, right? All it takes is for you to be on the wrong side of one trade to blow up a hedge fund. I think that the VIX is one that definitely could do that. And we're seeing a lot of fear going on in the world, especially when it comes to the monetary system. All we need is some stupid event to happen in the world that scares people outside of TradFi, and that could really start to hinder some of the short volatility profits that people have been taking for the past, 6 or 7 months.
All right. Big day tomorrow. Options expiration, if you didn't know what OpEx stands for. So there you go. We got OpEx, 17th of May. Big day. All right. That's going to wrap it up. We'll be back tomorrow to talk about said options expirations and everything else that is going on in the financial market. So if you have not yet, like, subscribe, comment. We appreciate everybody who watched this playback. We'll be back tomorrow live at our regular time, 3 p.m. Eastern. Have a great rest of your day. Stay safe out there, and we'll see you tomorrow.
Take care, everyone.
There it is.